Thank you, Melissa, and greetings everyone around the world. It's wonderful to be here to help kick off this important conference. And Mr. Chairman, I just want to say how honored and delighted I am to be able to talk with you as we start this up with our fireside chat.
Well, thank you so much, JoAnn, for being here. And I feel as if I should be interviewing you. You are a leader on regulatory innovation. And of course, you've been a regulator yourself. So I know we can learn as much from you as hopefully people can from the questions that you ask of me. So it's an honor for me to be here today. And I want to thank everyone who's participating from around the world.
So, and we have decided to try to make this a conversation rather than a rigid interview. So I'm especially looking forward to that. I'll just start by saying how much I have admired the CFTC's innovation work all along. I do work with regulators throughout the United States and throughout the world, and the CFTC has been uh, ahead of the curve by a lot in the work that you've been doing and the launching of Lab CFTC. So I'm looking forward to talking about that. I'm really thrilled to be here today. But I thought we would start with the basics. I know you've recently updated your strategic plan and your mission statement, and talk about how innovation fits into the basic mission of the CFTC.
Sure, and the CFTC is very unique, I think, in a number of respects. But first of all, our statute itself, the Commodity Exchange Act, there's actually a reference to innovation in it. And 20 years ago, there was a process put into our statute that allowed for self-certifications of various products on futures exchanges. And the idea there is that rather than having the CFTC see everything and approve everything ex ante, there would be a process by which it would be expedited, and exchanges could actually self-certify products to contribute to innovation. So that was 20 years ago. But fast forward till today. When I came in, the CFTC continued to be on the forefront of innovation. And as you noted, we took an opportunity now that we're sort of at the crossroads of the end of the Dodd-Frank Act implementation, and we're looking towards the future to really think about the CFTC's core mission. And the entire agency voted on a new mission statement, a statement of core values, and also a vision statement. And the mission of the CFTC is to promote the integrity, resilience, and vibrancy of US derivatives markets through sound regulation. And so integrity, resilience, and vibrancy, that third word there, vibrancy, is all about innovation, that our markets are not going to be static. They're going to continue to change and innovate. One of our 4 core values is forward thinking. And the staff, again, voted on that. And forward thinking is exactly as you said, JoAnn, which is all about staying ahead of the curve. And then, of course, we recently elevated Lab CFTC to report directly to the chairman, because I think the thought is that we wanted to make it on par with other offices and divisions as a very important message that the agency values innovation. So those are just some of the things that I think sort of takes innovation and really makes it part of the entire agency's culture.
Now that's so important. I think a lot of agencies start with an office that's going to look at innovation, and it's kind of bolted on the side of what everything else is doing. And if you integrate it as you're doing, you get the impact from it. Talk a little bit about Lab CFTC, then you've elevated it to report directly to you. What's its mission and what is its structure? What kinds of skill sets have you brought into it? That type of thing.
Yeah, and Melissa, of course, has done a phenomenal job as our second director of that office and the director during my tenure.
Yeah.
Really, when I boil it down, I think Lab CFTC has a twofold purpose. First, it looks outward, and it is a liaison to the innovation community outside the regulatory world, and in many cases, far outside of Washington. So to be that bridge between the regulator here and the community that is continuing to innovate and be that interface. So there's an outward looking feature where we want to connect with the outside world. We hold a number of office hours where innovators can come in, and we hold it in many cities around the country. And we may even end up holding it abroad, where innovators can come in and talk about products that may be ultimately products that would be regulated by the CFTC, so they can learn a little bit more about how our agency regulates and how the CFTC works. The second aspect is inward facing. We want Lab CFTC to be a place where new innovative ideas that are coming in from the outside can be taught and infused inside the agency. And so one of the things that Lab CFTC does is it shares an incredible amount of knowledge on developments in blockchain, on big data, and a bunch of other topics for our staff. So our staff continues to be ahead of the curve. And that's really the role that Lab CFTC plays, both an internal facing role and an external facing role.
So one of the reasons it's so important for regulators to digitize and innovate is that the marketplace itself is changing so fast today. Technology is transforming it. Talk a little bit about what you're seeing in the market in terms of new kinds of innovations in the derivatives sector and what the regulatory challenges are that arise out of that.
Absolutely. Well, I'm pleased to say that the derivatives market is thriving. And those three things that I mentioned, integrity, resilience, and vibrancy, they're all there. And we had a real live test of all of that during the pandemic, which I know is the overall subject of today's agenda. And so our clearing infrastructure worked, number one. And so the infrastructure was there. Our system was incredibly resilient. But the fact that innovation had been occurring during the past decades meant that our markets, unlike some of the other markets, for example, the trade in securities and other products, our markets were almost entirely fully digitized. So of course, what did that mean? Well, it meant when we moved to a system where people were no longer allowed to go on trading floors because of the spread of COVID-19, they were sitting at their computers and were able to continue to facilitate orderly markets, liquid markets, because the industry itself had innovated and the CFTC helped empower that innovation over the last 20 years. So as a result, had we not had that digitalization, it would have been really tough to continue to have our markets remain orderly and liquid. So that's one big aspect of what we've seen in terms of innovation. The other is just in terms of the products themselves. There are commodities today that no one had even heard of 10 years ago, and certainly 15 years ago. And I'm talking about digital assets. So we've seen a rise in Bitcoin futures products, and we've also seen new digital assets like Ether for the first time list contracts. And those are continuing to grow. And I think as a result of the pandemic, people, and particularly central bank policy and other things that are now in place, people are looking for alternative asset classes that aren't necessarily correlated with traditional asset classes to invest in. So that's that is the kind of innovation we're seeing. We're also seeing a lot of harnessing of data and trading strategies that are based on big data. So that's a big high level view of the kinds of trends we're seeing.
So, and how are you adapting your market monitoring and surveillance techniques to keep up with the digitalization that's going on in the industry? How have you changed what the data that you're collecting, the data that you're looking at and analyzing?
Yeah, we're really doing it on two fronts, I think. First of all is we are investing in technology. We are investing in technology and infrastructure. And in what I hope will be a couple of months' time, we'll be announcing a major reorganization of the agency that really goes to the ability of us to harness data and use it in the future. The second thing we're doing is, apart from investing in technology, is we're of course investing in people. The kind of people we hire today, often many of them come from backgrounds that are related to blockchain, that are related to technology, that are related to data. Whereas back in the day, we would hire people with maybe more traditional finance backgrounds, or in some cases, specific industry backgrounds such as energy and agriculture. We still tend to hire those people, but alongside them, we're hiring a lot more people now with Silicon Valley backgrounds. And it was really important for me to bring in people, if at all possible, and we look at this when we make hiring decisions, people with private sector backgrounds, particularly in innovative fields. So Melissa, of course, was brought in from a Silicon Valley-based company. And that was really important, not only for what it brings to the agency, but I think also the signal that it sends to the outside world.
Yeah, I agree with you on that. So I know regulators everywhere want to understand what is the secret sauce of attracting people from the private sector and especially the technology backgrounds into this public sector work. And the CFTC has been good at this for a long time. I know you have a lot of data scientists, but what's the pitch to get those people to come on board?
It's a great question, and maybe I should flip it back to you to provide some advice and counsel. But my what I would say at the outset is that success breeds success, and so if people on the outside world see that innovators, people of similar backgrounds, are going to places like the CFTC, they're happy there, and they're ultimately making a difference. I think that's the best. That's the best way. Recruiting by people and by networks. But I would love to hear, JoAnn, actually, if you had any tips for us into how we could continue to tap into that network.
Yeah, I'd be happy to talk about that. I think about it all the time. I think part of it is that tech people, software engineers, designers like interesting problems. And I have seen agencies making a lot of progress in bringing people in whose other option might have been to be in Silicon Valley. And one person said to me, I could stay there and like tweak a shopping algorithm so that somebody would buy a little bit more of something, or I could go into the government and tackle some of these really important problems that we have in the government, um, and and find problems that are interesting and that, frankly, I say this um, without trying to denigrate anything that's been done so far, because this whole area is in flight. But we have a lot of problems in government that are untouched by good technology so far. You know, it's like a green field for people who want to come and really build something. Again, I think the CFTC is an exception to that in many ways. But I mean, there's so much opportunity to build better. I ask myself, why in government do we have uh, such terrible UX in most things, you know, terrible design? Why don't we have design centered, human centered design and design thinking really driving the way we work in the government, the information we're getting, how we're using it, how we're deploying it? So you put smart people on problems like that, and you can get them at least for a while. That's what we hear.
Terrific. Thank you.
So talking more about the pandemic, uh, tell us about some of the things that you have done specifically at the CFTC to uh, adjust to the sudden emergency scenarios that have been emerging, and then how you see going forward. How does the pandemic change your work?
Well, the first thing we had to do was focus on the markets, because if you think about it, the pandemic led to historic volatility. The volatility that we saw in the derivatives markets was actually far beyond that which we saw during the financial crisis. So our first, sort of duty was to go and make sure that our markets remained orderly and liquid. And what we did was essentially create a series of targeted temporary relief actions that would allow the facilitation of those markets to continue to go with social distancing in place. Now, as I mentioned before, the great news is that we didn't have to do any radical change because we already had nearly fully digitalized markets. However, just because they were digitalized didn't necessarily mean people were sitting at home trading. So we then had to move from the trading floor at a particular company to how do you do that at home? And so there were a number of measures that we put in place that allowed people to continue to trade from remote locations, such as, for example, recording, timestamping. And so we've given people a transition period. At some point soon, they're going to have to go back to applying our rules and regulations, but to make sure that people could trade and we weren't putting them in harm's way by saying, no, you got to go into the office and you got to sit on the trading floor with the 60 other people on your desk. That's what we wanted to avoid. So that's an example of the kind of relief that we gave. We also asked ourselves, well, what's the business as usual stuff that's going on, various reports and things, and given that we want businesses to focus on continuing to make markets, to continue to make margin calls, et cetera, we were able to suspend or some of those routine reporting requirements so people could focus on what mattered most.
And as you go forward, do you see some of this continuing to transform how you do your work?
Yeah, I think it taught us a great lesson about the importance of flexibility. And one of the things that makes the CFTC unique is that while we have a bunch of detailed rules that govern certain areas of conduct and behavior, we also have a principles-based approach to regulation in a number of other areas. And the advantage you have with a principles-based approach is that it allows flexibility both from the standpoint of the regulator, but also by the regulated. And the crisis taught us the importance of staying flexible. And so I think particularly in areas that are continuing to innovate, you'll see us moving forward with a more principles-based approach.
Yeah, I wanted to ask you that. So yeah, you do have a mix, and you think that going toward principles-based with better data is that one of the keys to better regulation and oversight?
Yeah, I think it's really there's a set of objective factors, and I'd laid these out about a year ago in a lecture at Harvard University, which is sort of when do we go with rules based and when do we go with principles based? And so some of the considerations you take are number one, is it an area that's going to be rapidly changing? And if the answer is yes, then you have the problem of regulations becoming obsolete as soon as they're introduced. So that would lend itself more to principles based. If there's a high degree of trust between the regulator and the regulated, that would lead to more of a principles-based approach. If we're afraid of people doing creative compliance, in other words, people, following the letter of the law, but not necessarily the principle behind it, then you might want to go with a more principles-based approach. And then there are other areas, for example, regarding data reporting and collection, where we've actually found that a principles-based approach is not that helpful because it's led to a mishmash and an inconsistency of reporting. And also people lack the clarity they need to figure out, well, what am I supposed to report? What am I not supposed to report? And we need uniform data. So there we've actually gone with a more rules-based approach. So it really depends on the nature of the field. But overall, I would say that when it comes to innovation and new products, we have found that a principles-based approach has provided that degree of flexibility. So we're not necessarily picking winners and losers, and we also are acknowledging by definition, there's probably not one right answer.
Talk a little bit about so if we think about the challenge for regulators, as Melissa said, I'm a former bank regulator myself. I was deputy controller of the currency. I never criticized the regulators. I think the regulators have the hardest job in all of this because you're expected to get everything right, but at the same time, you have to speed up because the marketplace is speeding up. All the technology around us is speeding up. And that mismatch, the fact that we're living with exponentially changing technology, we've had Moore's Law going now since the 1970s, with the technology processing power doubling every 2 years or so. And now on top of that, today we're putting artificial intelligence and things that are going to accelerate it even more. So the COVID pandemic has been teaching us a harsh lesson in exponential change, that it's deceptive because it looks gradual for a long time. You can see the trends, the curve is rising, but then suddenly it takes on that hockey stick shape and turns sharply upward. And regulators are built to change at a linear pace. And I like to say that, as they would say in the tech world, that's a feature, not a bug. We expect our regulators to be careful and prudential and deliberative, and that slows things down. So what are the secrets to moving faster as a regulator, to keep up with what's going on in the marketplace, being able to see ahead, kind of around, as Wayne Gretzky said, where the puck is going to be and skate there? What are the secrets to that?
JoAnn, I wish I had those secrets. I'm still trying to learn them myself, but so based on my experience thus far, I would say a few things. First of all, you're exactly right. I mean, you put it exactly right that government and innovation don't necessarily go well together. One could argue that a regulatory culture and an innovative culture may very well be to some extent contradictory. I don't think that's the case. I think there's a way that you can meld them together. But it's certainly true that government regulators and government in general, quite frankly, it just sort of has a very different culture. For example, we still have 5-year plans. And of course, that's like reminiscent of the Soviet Union. But yes, we still have to do a 5-year plan. It's actually required. So you don't see 5-year plans in Silicon Valley. You rarely see 5-day plans. So there are cultural differences. I think the biggest one is the one that you put your finger on earlier, which is this concern, and I would call it asymmetry in risk. So Silicon Valley knows that in order to innovate, it entails failure. Well, failure in Washington is generally not something any regulator wants to be attached to it. And obviously, I don't want major failures either, because our job is to serve the American people, not fail them. At the same time, we do need some degree of experimentation. And so what we have to do is to get a culture from the regulator that, look, if something doesn't work out, we say we're going to take a chance on certifying a product or approving a product or a new thing like that, and it's innovative and it's risky. We have to be able to say it's okay to take risk in the name of empowering innovation. Now, obviously, we want to get that balance right. We don't want to take unnecessary risk. But regulators, I think, unfortunately, they don't bear the upside. They don't get the upside of an innovative product succeeding, but they certainly get the downside that if it doesn't succeed and it fails. And so one of the reasons we have Lab CFTC and all those things we discussed earlier is to say innovation is something we value and we know it could come with a cost, and that's okay. And it also requires leaders like me to be able to say, look, if this thing doesn't work out, I'm going to take responsibility for it, because I would rather try to dare to do mighty things, as Teddy Roosevelt said, than to stand in the twilight, that for those that know neither victory nor defeat. And I think with innovation, that's exactly the kind of mindset you want to have.
Yeah, I hear regulators increasingly talking about having courage to try things, and it doesn't come easily. And yet it's becoming more dangerous to hold still. Nick Cook, who heads innovation at the UK Financial Conduct Authority, told us that that they reached a point where it came home to them that if they didn't move forward, even when they weren't completely sure what to do, they would be in effect accelerating backwards, because the world around them was changing so fast. And that's a hard thing to get your head around in the regulatory world or any of the worlds that we're in. But it really is becoming more risky. We're deceiving ourselves if we think that if we hold still for 2 years and try to figure out exactly what to do, it's not going to be more clear in 2 years. It's going to be less clear. And meanwhile, Nick actually also said if we wait 2 years to move, we'll be 10 years behind where we need to be because of the environment we're in. So
That's an outstanding point. I just want to say you're exactly right. There's a cost to doing nothing, and that cost may be too much for the agency to bear. So I think you're spot on.
yeah, good. So I think there are 2 secrets to regulatory innovation. I'd love to talk with you about both of them. The first one is the one you just talked about, which is the risk taking. And as you said so well, the notion of move fast and break things or fail fast is just anathema to us here in Washington most of the time. But the key to it is to find ways to sort of ring fence that risk, because there's no innovation without trial and error. It doesn't exist. If you don't try things and see how they work, you don't innovate. So what are some of the strategies for that, to do things on a basis where if it doesn't work out well, you haven't let it out into the wild, so to speak? You can keep your eye on it.
One of the things we can do and we have done is to do pilot programs. So rather than introducing massive change at once, we sort of use a pocket of the agency to experiment. And therefore, we can both move forward and see if innovation works, but we can do so, as you say, in sort of a constrained way so that if it does fail, it doesn't have a massive effect. So I'd say that that's one thing that we've used in the past. Both I've used it at Treasury as well as here at the CFTC. For example, in the enforcement area, we work to develop an algorithm to detect spoofing. And I won't go too much into that with the secret sauce, but that was something we had worked on for a while. And ultimately, it bore fruit just this past year, where we were able to bring a successful case based in large part on our ability to detect that behavior through technology. And had we not spent the time, effort, and money on that technology, that case may have never been brought.
Yeah, you told me about that one. That is so fascinating. So I think that the trial and error testing is one of the keys to innovation. And the other one is new kinds of collaboration. And we talked about this when you talked about bringing tech people into the agency. The longer I work in this space, the more it's clear to me that knocking down the silos that we all tend to live inside of is the secret to innovating and to accelerating. It's just not possible. You have to bring, I've been saying we need to basically bring the tech people into the room where it happens when we're making regulatory policy. So there's someone at that table who's going to look at that problem and the potential solutions differently than we would if we're a lawyer or a traditional regulator. They'll have different thoughts on how to get the information. So I know we have a lot of international listeners today. Talk a little bit about what are the strategies and secrets to success for greater collaboration among agencies, among countries, between regulators and industry, just across the board. How do we get more people sharing their special domains and skills?
Yeah, it's so important. Both the pandemic and innovation, I think, have really brought to bear the importance of international coordination. In fact, with the pandemic, it's interesting. I'm actually now talking to my foreign counterparts far more frequently. Just this morning, for example, I had another call, and it's simply because we know we need to coordinate better together, because markets don't look at national borders like regulators do. And that's certainly true with innovation. In fact, it's exponentially true with innovation. And so on all of these issues, we really got to coordinate. The great thing about the pandemic is that it basically showed us we can have a lot more conversations via video like we're doing now. We don't have to travel to Basel every month, but rather we can have 3 calls in the same month via video. And so that has been an important aspect to it. And then there are more sort of things that we've created in the last few years. I'm thinking of the GFIN, the Global Financial Innovation Network, for example, that the FCA in the UK started. Now it has 50 different members, for example. We're a member of that, as are many of the people probably watching today from all over the world. That's a really important forum for sort of talking about innovation issues. In IOSCO, working on innovation projects there. And then also the FSB, for example, has a stablecoin working group to look at specific issues like that. So all of these issues are facing us all at once. And my view is that it's not like regulators can say, well, we're going to stop the technology. The technology is coming. So it's either up to the regulator to catch up or to fall behind. There's no stopping the technology. And that's why it's so important that we work together, because we don't want a situation where the technology goes to a jurisdiction that doesn't have the kind of regulation that can protect consumers against harm and also stave off some bad practices. So it's really important, all the more so that we work together at the international level.
Yeah. And I think especially so for you, because you're working with crypto. And if we've had any mold-breaking technology emerge in recent years, as cryptocurrency and crypto assets that just don't fit inside the lines that we used to have. You know, we understand what this product is, here's what it does, here's who regulates it, here's the law that, that applies to it. All of a sudden we have to think with much more imagination. Do you want to talk about that? What do you see ahead in terms of the challenges in that space and the strategies for getting it right? Getting
So
the kid and not the man.
yeah, no, absolutely. It's a really exciting field because, like you said, it's something that is new. It's everywhere, and quite frankly, the regulatory regime has not caught up to it. So one of the great things that the industry faces is uncertainty. Is it a security? Is it a commodity? How is it actually classified? And that's a big threshold question. So that's the first thing. The second thing is I think crypto is so unique that we're going to have to go back through, particularly for those assets that are now considered commodities and will be commodities in the future. We have to rethink our entire derivatives trading system to think about, well, how could crypto fit into that? For example, custody issues. It's pretty straightforward where you have gold or you have wheat in a grain elevator where the custody is. But with crypto, some unique issues have arisen. There's also questions about valuation and margin. We don't have a lot of data on crypto and its sensitivity to other asset classes. So how do you have margin models that take that into account? So I really think we have to look at our entire regime at the CFTC and say, let's suppose now we have more and more crypto products. What changes do we need to make? There's even accounting considerations. Well, how do you account for crypto? So under some accounting rules, it's an intangible asset. What does that mean? But really, we have to go through systematically and look at everything and think about what changes or updates need to be made because of crypto. And then a final thing is very important, and that's that we want to encourage people to innovate in the right way. We want to encourage law-abiding innovation. And one of the things we're seeing is that the good guys and girls are actually coming to the CFTC. They're talking to us. They're trying to create products that conform to all relevant, laws and regulations. But there's also people out there, both in the United States, but also outside the United States, that are flouting our laws and regulations in some way or form. They're manipulating their particular exchanges, or they're failing to register if they need to register. And so those are areas where we're going to focus on enforcement. We've already brought a number of actions, and I think you'll see us continue to bring actions. So we ensure that people that are engaging in bad behavior in the crypto space are not rewarded. Because my overarching concern, is that if there are problems in this industry, there may be an adverse reaction from Congress, from other regulators, that essentially snuff out innovation. And we ultimately see this market going overseas. And we could end up seeing a country like China, for example, leading in blockchain that could transform the financial system of the world and leave the United States, as well as some of the other countries, Western style democracies that are joining us here today, behind and out in the cold.
Yeah, I agree completely. China's already on the currency side piloting the yuan, and when you think about the potential transformative effects of a new crypto-based, blockchain-based currency, we're not built to deal with these kinds of changes so quickly, which is why it's exciting to see people really moving.
And obviously, we welcome countries like China to continue to innovate, but I think we want to make sure that we do everything we can to ensure that the U.S. continues to lead.
Yeah, exactly. Staying on the collaboration issue for a moment, are you starting to move to using agile workflow at the CFTC? Trying to pull teams together, the cross-functional teams that attack little quick problems.
Yes, and in fact, one of the things that we've done. So the answer is yes. When you look at all of our rulemaking and policy teams, as well as enforcement teams, you'll see people from multiple divisions normally there. The other thing, of course, is that's one of the major functions of Lab CFTC, and it's internal work, getting involved with policy. So if we're doing rulemakings on crypto or blockchain, looking at various aspects, oftentimes we'll have Lab CFTC. In fact, not just oftentimes, all the time, we will have requisite experts from Lab CFTC embedded in those divisional teams, so we can remain agile.
Great. So I want to widen the lens a little bit and talk about data. It seems to me that technology and data are the issue of our century. Now, how is data going to be collected? What's it going to be used for? What good things can it do? What bad things will it do? And here again, I don't think we're equipped to answer most of that very well. I mean, we're just not used, again, the pace of change and the profound nature of the change. If we talked earlier about the fact that the marketplace is digitizing financial services, everything's digitizing. You know, I'm sitting here in my home, I've got my TV over there, I can stream my Netflix shows tonight anytime I want to. We've got, we've got uh, uh, technology transformation everywhere we look. I saw something the other day that, anyway, I won't go down the road, but just we know that financial services is not going to stay out of these completely mold-breaking changes. So when you think about how you get data reported to you by the firms you're overseeing, and how you monitor the wider landscape, where are you in moving into the cloud computing environment, and are you developing a vision for how you're going to manage data, keeping it private, keeping it secure, but dealing with the fact that increasingly you'll be using AI and machine learning and natural language processing types of techniques to understand what it's telling you? What's the big picture for that?
Well, the big picture is exactly kind of what you've laid out. First of all, we have to figure out what kind of data we need. So, for example, it was absolutely critical during the pandemic that we got, intraday information on the margin levels in our clearinghouses. And it was incredibly important to understand what was going on so we could see risk throughout the financial system. The one thing we didn't have was margin data from the uncleared swaps market. And so for the first time now, we will start collecting that based on the rule that we just passed a week ago, or a set of rules on swap data reporting. So that was a bulk of information that we had never collected before. And now for the first time, we're going to have insight. And this is hundreds of billions of dollars worth of margin in the years ahead. And so that's something that's critical, figuring out what data do you need. Secondly is sort of, well, how do you collect that data? How do you specify that data so people are doing standardized, uniform data reporting? And so that was the other big thing that we tackled. But then the question becomes, all right, well, now it's in the agency. Now you've put out there what you want, and you've now got it. What do you do now? And so we are looking at cloud computing. We have a mixture of cloud-based systems and of proprietary infrastructure at the CFTC. So that is one of the big key questions that we are looking at: is what do we move to the cloud? How much do we move to the cloud? And then the final question is, everybody knows what we've told people. This is the data we want. They've reported that data. We now have that data stored somewhere, maybe in the cloud. What do we do with that data? So now we're also tackling the question of, how do we use data to make decisions? How do we harvest that data? How do we analyze that data? And so one of the things we'll be doing in the next year is coming up with another strategic plan just on data. And that will be part and parcel of the sort of the contemplated reorganization of the CFTC that would culminate in a new division of data, so focused solely on all of the things that I just mentioned.
That sounds great. The SEC and FINRA both are using artificial intelligence to analyze reported data and big data, and so are a lot of securities regulators around the world. And you might know FINRA is a tremendous user of Amazon Web Services. And it's a sea change in how regulation is done, especially for entities that are collecting across a wide swath. And if we do it right, the reporting process can get easier for the industry, especially, as you said, if we can get the standards, the data standards, formats, and architecture to be universal, so that everybody's not reporting in different ways. I'm serving as a judge in the G20 tech sprint this year. The G20 surveyed regulators around the world to ask what problems they have with technology, and came up with 3 use cases. And one of them is digital regulatory reporting, which I'm a judge in. And we'll have the results of that out in, I think, next month for the Singapore FinTech Festival anyway. And I've been astonished at the sophistication of the proposals that came in on how to transform regulatory reporting to drive down the cost and to improve the results for the regulator and to get it to real time. Again, you've gotten the advantage over many agencies, but getting real-time complete data, as you just said, we need that today, or the regulator is blind to it. And we don't have that in most of the regulatory realm. And as the world changes so fast, it's extremely tough. You know, there's work underway. I don't want to do a monologue here on this, but there's a lot of momentum underway in creating machine readable and machine executable regulation, and especially regulatory reporting, where basically the regulatory body issues a rule requirement in the form of code that the industry can drop in, do their data systems, and automatically generate a correct report. And then potentially going to a movement toward pull reporting instead of push reporting, so that within the right kinds of permissioning, regulators will be able to see into certain types of systems all the time, incomplete data, and therefore see the risk trends when they're emerging. You know, and that is so full of difficult, complicated challenges. But a lot of the regulatory world is moving in that direction. Early days. Does that resonate as you think about the direction of the work that you're doing?
It absolutely resonates. I think, you know, we would love to get to a place where, let's say 10 years from now, just thinking practically from a government agency standpoint, we are that fully automated in using data. I think there are a number of intermediate steps, you know, things, for example, we have a lot of no action letters that are out there and other types of forms of regulation. I think most of our rules are probably digitized in some form or not, but I think a lot of our no action relief over the years, which forms sort of a body of common law, if you will, that informs the regulations, those have never been digitalized. So that's something that digitized. So I think we really want to think about ways we can sort of take those initial steps. So if we digitize them, then the industry can get a hold of those digitized versions. They can start feeding them into their systems and potentially producing AI-based solutions based on it.
Yeah, we need to move, I think, toward a common language for regulators, a common data language. I will say at AIR, my organization, we put out a paper called a RegTech Manifesto in July as an argument for why we need to digitize the financial regulatory system and what that would look like and how to get there from here. And now we're feeding it's a request for comments, and we're feeding the results of that into exploring something we're calling the Regulatory Design Project to try to zero in on these key data issues. But, you know, when we step back from it, the biggest challenges are not technology at all. We really have the technology we need to do whatever we want to do in financial regulation. It is more on the culture side. And you talked about the culture issues in terms of getting a variety of people into the agency and getting people to work together. What are the other cultural problems and solutions you see in modernizing the CFTC's efforts for the digital age going forward?
Yeah, I think a lot of it is generational. I mean, we're lucky at the CFTC that we have a lot of very senior folks that have been at the agency for decades, and they have with them a treasure trove, if you will, of knowledge. But as I look at the agency, I think we value diversity at the agency. Obviously, we value gender ethnic, racial diversity. But I also value generational diversity. I think you want that right blend of kind of the senior folks that have been in the industry. In some cases, we have CFTC personnel that have been here for 40 years. And just being able to go to those individuals and they remember when, and they understand the evolution of a number of our rules, it's incredibly insightful. But I also think it's helpful if we have, sort of the next generation, so to speak, because a lot of the next generation has grown up with technology. It's secondhand. I am on the cusp, so I'm the first actual Generation Xer to lead the CFTC. Everyone else before me was either the baby boom generation or, silent generation and going all the way back. So I'm the first Generation Xer to lead the CFTC. And as a result, I'm sort of on that cusp of having grown up with some technology, but not fully fully infused with technology. In high school, was when we moved from the typewriter to the computer. So I still learned to type on a typewriter. But I think it's really important that we create space in the agency for the next generation. And I think that alone, that we don't necessarily have to change the culture, because the culture will change organically as we bring in new people with new ideas for whom technology is not something that is sort of foreign.
I love that point. Gen X is bringing change, and the millennials, as I'm sure you know, are the biggest generation in the history of the world in the US and globally, and the older ones are about 40, and they're going to be reshaping the world. I'm a baby boomer. The boomers did that when we were young, and they're all digitally native, and they're going to change their workplaces, and they're going to change how the financial markets work to serve their customers as well. I see we have a note in the chat that we have a question from the audience that Melissa can share with us. That would be wonderful. Tell me if I read that message correctly.
Actually, this is Siobhan, and I can share the question with you from our audience members. The question is there any plan to work with the SEC to include futures data into the FINRA's CAT, the Consolidated Audit Trail project for trade surveillance? Any plan to work with the SEC to include futures data?
Message correctly.
Actually, this is Siobhan.
Great. I think we're certainly open to having that dialogue with the SEC. I mean, one of the things we didn't talk about was in our strategic plan. We make very clear that working with the SEC, and if at all possible, making our regulations consistent on many areas where they overlap, was incredibly important. My hope is that one day in the near future, we will even have a joint open meeting with the SEC for the first time in our 45 years of existence, where we can actually vote on something together. Because the two agencies, while we've been together on many issues, we've also been apart on many issues. And so one of our desires, in order to help empower innovation and also make life easier for market participants, is to converge where it makes sense to converge. So this I would put as a sort of a potential topic in that larger conversation with the SEC.
Wow, that would be fantastic to have that kind of a joint meeting. I think that's exactly the kind of thing we need. People look at our US regulatory financial agency structure, and it's very complicated, and makes it harder in some ways for us to do things. And although you can defend it, the value of it, I think maybe especially with the CFTC, but we need more connective tissue. We're not going to restructure, almost certainly, but so we need better new ways to work together and learn from each other and accelerate the efforts together, as you talked about earlier.
I mean, I would say that this particular group of financial regulators at this time are very well connected. And the interesting thing is many of us have known each other. None of us thought we would all end up in this place, at the helm of various regulators. But there's a lot of connections there that have enabled us to work very well together. So 20 years ago, I was a summer associate in London. and I was assigned a partner mentor for the summer, and he was a newly young minted partner. Well, that person was none other than Jay Clayton. Yelena McWilliams from this FDIC. She and I worked on the same banking committee staff together. She ended up coming after me, but we knew all of the same people and have been friends for a decade. Brian Brooks, now leading the agency that you came from, JoAnn, known him for a decade as well, and we had worked together when he was a general counsel and I was the outside law firm. And the sort of the list goes on and on of people that we've known, and as a result, I think we've really worked well together, and we've understood that we need to put sort of the past agency turf issues to the side to work for the common good, and particularly in areas involving innovation.
I will echo that. I agree with you that the current group of agency heads is much more collaborative than I've seen in my many years in the space. And that goes a long, long way, as you say, especially as we are today. I know we're running short on time. Talk a little bit then about whether there are things we haven't covered on the regulator of the future. What's the vision there? What is it going to look like? How will it be different? And what will be the main challenges that will be faced?
To some extent, I would say that it's hard to come up with that vision because the regulator of the future really needs to keep pace with the innovation community. And so wherever technology goes, I think the regulator must go with it. And I am not a technology visionary, of course, but I am a visionary when it comes to our agency, and as are everyone that works at the agency. So our mission, our vision statement, I didn't mention that the vision statement, the last of the three things that the entire agency voted on was the vision statement. And the vision's very simple. It's to be the global standard for sound derivatives regulation. So whatever it is, the CFTC, we want to be that global standard. We want to be the standard that everyone else looks to when you think about issues involving the derivatives markets. And that's going to mean that we need to keep pace. And so where that will take us, no one really knows, but the future generations. But really what we have to do is right now instill a culture that values innovation and that values harnessing technology for sound regulation. And so the future is unwritten, but that is our guiding principle. And maybe I could ask you that question. First of all, what you see as the regulator of the future, the ideal regulator of the future, and also maybe judge the CFTC. What have we gotten right? What maybe we can do, what are areas we can do better in? It would be really useful, given your depth and background, to sort of get your assessment of us and what we're doing and where we're going.
I'd be happy to answer that. And I also see, well, we had a question, but I guess we're going to not have time for it. I think the regulator of the future is going to be data. I agree with what you said. We don't know. I mean, that's the short answer when we can't prejudge it, but it will be data centered. It's going to be using all of this rich data that's coming in, going to be very sophisticated in bringing artificial intelligence types of methodologies into putting that to good use. It's going to be obsessed with keeping information secure and safe and private, which is going to be incredibly difficult in the world that we're living in. And it's going to be very efficient. My dream, people used to tell me regulators can't change. And I would say, I know that's not true because number one, they already are changing, as the CFTC is doing. And number two, they have to. They don't have a choice not to innovate and change. And so when I look at the CFTC, I think that you're well along on those challenges. And I would especially point to the success in bringing in people from the tech world, as you say, leading Lab CFTC and the other profile of the people you've been able to attract. And then, as you say, having your the entities you're overseeing digitized puts you way ahead of having to use the old analog processes that were designed on paper decades ago, or centuries ago in some cases, even if they've been automated. those designs need to go away, and we need to figure out, if you start with the data and you know what you need to find out from it, what's the best way to do that. And when we do that, the agencies will thrive, the market will thrive, and the investors and financial customers will thrive too. And it's a journey, as you said. It's going to take a long time, but it's urgent, and it's very exciting to see all that you're doing. So I give the CFTC an A+ for what that may be worth.
Thank you.
I think we are out of time. So I just want to thank you for inviting me to talk with you today. I've learned a lot. It's just been absolutely fascinating and inspiring.
Well, thank you so much, JoAnn. Really an honor to be with you here today and to be with everyone that's watching. Thank you so much for participating. And I know we can learn just as much, if not more, from all of you than you can learn from us at the CFTC. So we very much want this not only to be a one-way dialogue or a one-way monologue, but rather also a dialogue that will start here today and continue in the future.
Absolutely.